We live in a fantasy world now. Reality has been destroyed.
This is the time that you really need to pay attention.
The probabilities are overwhelmingly on gold's side. That is the best environment to see gold increase its value.
Welcome to Palisade's Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Christopher Aaron, founder of iGold Advisor and senior editor for Gold Eagle. Christopher, thanks for joining me again.
Tom, thank you so much for having me.
Always a pleasure, Christopher. And, it's always an interesting conversation with you. You have a very distinct outlook and some very rigid, I would say, rules, or let's say a rules-based approach on how you see these markets. So I want to start by talking about sentiment right now. We've seen the election result recently, and that seems to have really had a step change in a lot of risk on assets. And let's say some of the backing off of some of these defensive sectors. So how is sentiment right now? And is this the end of the gold bull market?
It may be, Tom. I just want to come out for the record and kind of rewind and let people know, I started publishing as senior editor for Gold Eagle back in August of 2015. I was looking at the low that was setting up in gold around $1,000 per ounce. It was coming back to retest that level after the major breakout in 2009. Came back to $1,000 per ounce. I was not in the precious metals markets, mostly from 2011 to 2015. I kind of stuck my neck out. Everyone was super bearish on gold back in 2014 and 2015. It had been declining for 4 or 5 years. No one really wanted to talk about it. It was just sort of the diehards left. And I kind of stuck my neck out and started publishing articles on Gold Eagle and saying, hey, I think a low is setting up. Mm-hmm. Now, I didn't get the exact bottom right to the day. No one does. I'm not trying to say that. But the bottom came about 3 months after I started publishing. It was the end of 2015. Gold bottomed just above $1,000 per ounce. And here we are 9 years later, and I'm still publishing for Gold Eagle. And as of 2 weeks ago, gold had nearly tripled in 9 years. Mm-hmm. It went from just above 1,000 to just below 3,000 in 9 years. That's quite a run. I'm really happy for people that were kind of following the analysis back then. In 2015, it's quite a run, and nothing moves higher forever, Tom. Mm-hmm. Every asset class, no matter what the fundamentals, every asset class moves in waves and in cycles. The people who are only willing to look at a market with the lens of things can only move in one direction, they're going to be on the wrong side of the market eventually. So I think investors need to take a step back here and say, look, if gold has nearly tripled in 9 years, how much further do we have in this run? Seriously, how much further do we have? And now when I look at some of the really important resistance levels that I've been monitoring for gold, there's huge resistance right below 3,000. We could talk about all the technical levels that represents. But then when I take the even bigger step back and just observe here what has happened in the markets after Trump's victory in the U.S. election just 4 days ago, and then the follow-up to that very closely after that is the Federal Reserve meeting that happened 2 days after the election. So we kind of have both of those things to talk about, and there's a very interesting congealing of events with respect to the U.S. election and the Federal Reserve that's literally happening right now in front of our eyes. Mm-hmm. But when I take a step back and look at the market reaction, when I look at what is, the market is what is. Everything else is a story or hope or something that someone is telling you. But if I look at what actually is after the Trump election, and then the commingling with that into the discussion around the Federal Reserve that maybe we'll have in a moment, what we can see is that the stock market has nearly skyrocketed here. I mean, a mini little skyrocket. Stock market's up almost 10% here in the last week, 7% or so. And meanwhile, we have, gold that has come down $130 just in the last four trading days.
Mm-hmm.
And if I was to rewind back to the last time that Trump won back in 2016, and for the record, I don't want to get too political here, but I do want to say that as a net sum, I believe that the Trump victory is a good thing for the U.S. economy, for the world, for security, for prosperity. I believe that as a net sum, it's a good thing. Yes, he has a lot of strange character issues, and no one is perfect, including Trump. But as a net sum, I am pleased with the results of the election. And if we were to just rewind back 8 years ago, the last time that Trump won, and we take a look at what happened in the window after the U.S. election, we had a spread of 25% in which the stock market outperformed gold over the 6 weeks following the U.S. election. 25%. Mm-hmm. Stock market was higher by about 8-9%. Price of gold was down by 16% following the last election of Trump. And so we put that together. We look at a 25% spread. So far, the playbook is going eerily similar to the last time that Trump won. I'm actually surprised, to be honest. I thought that the market would have, in looking at some of the betting odds and some of the polling averages coming out in the weeks before the election, I would have thought that the market would have already started to price in the Trump victory. Apparently it didn't, because we're seeing this, this real takeoff in the stock market, weakness in gold, weakness in silver, strength in the U.S. dollar, I think is really important to notice. So as a net sum, as someone who is still a precious metals investor, and who is saying that it's never a question of selling all one's gold or all of one's gold and silver miners, because there's always a possibility of sort of a black swan event or the markets refocusing on issues of debt or issues of sovereign currencies. There's always that possibility. So we always want to maintain some exposure of gold into gold. But all that said, when I look at the market reaction, when I look at what actually is on the charts in front of me, the actual reaction by the markets, it is very clear to me that the market is interpreting the Trump victory, and then follow on, we'll talk about the Federal Reserve, the sum of these two things as being very pro-growth, mm-hmm. pro-stock market, pro-technology, pro-innovation, pro-U.S. power in the world, and therefore pro-U.S. dollar. And therefore, because of all those pros, basically a less need to hold gold, a lesser need. There's nothing wrong with gold. There's just a lesser need to be owning it for the foreseeable future, is what the markets are telling me.
Mm-hmm. So, Christopher, I'm having trouble trying to, word this question. It seems like the fundamentals haven't necessarily changed. We still have the debt equation. We still have the debt outstanding, the interest payments on the debt that is pointed to. We still have, inflation is now basically, let's say the floor is now 2-ish%. And that none of that has changed with the election of Trump. I think obviously the let's say the war trade or the war worry trade for gold has come off a pretty decent amount. But on balance, are the first two pieces of it more important and, let's say, dollar strength than the fundamental debt equation? Does that balance in the favor of obviously gold being less attractive as, let's say, a speculation at this time?
According to the markets, it is. That is the truth of the markets right now. And the analogy that I would make to this scenario that you've just outlined. And for the record, I agree, Tom, that the debt has not gone away. The interest payments on the debt are the highest that they've ever been. Unfunded liabilities are, approaching $100 trillion. That hasn't gone away. So I'm not disagreeing with anything that you're saying right here. What I'm saying is that is true. That is true. The analogy that I would make is, imagine those topics that you've just discussed are like someone who has a flu. And so you're sick, and it's true. You're really sick. You got a fever, runny nose, body aches, everything that's been going on for days, right? It's a flu. It's true. And it's not or. And at the same time as that's happening, there is a Category 5 hurricane that is 48 hours away from making impact on your hometown. Mm-hmm. We've just seen a couple of these hurricanes in Florida and the Gulf Coast of the U.S. So the flu, the things that you're talking about are true. And there is something that is also true and even more powerful than the things that you're talking about with those true fundamentals that is happening at the same time. Mm-hmm. And if one is going to be, I'm going to say it, if one is going to be so short-sighted as to only focus on those problems that are true, but that are rather shallow in comparison to the bigger picture, then one is going to be blindsided by the bigger issues that are coming, the bigger possibilities that are coming. The analogy I'm giving is a disaster, but with every disaster, there's a regrowth and a rebuilding that happens with opportunities. So I really feel like that is the analogy. Those fundamentals are true, but they are not the only fundamentals, and they are not the most important fundamentals.
Yeah, I mean, there's so many times where we have seen the fundamentals of any of these markets be pointed to as being an inevitability. However, that's not necessarily always the catalyst for change, right? We can see several of the commodities markets in production deficits without actually creating this bull market that people are expecting based on the back of that. So obviously timing is very important, and this larger perspective is also extremely important to have. And I think, a perfect tale of this, and one of your most important charts that you speak about, or that you and I have spoken about before, is this Dow to Gold ratio chart. What is that telling us? And what does a break lower and a break higher mean as well?
Yeah, so I'll provide this chart. So here we are, Tom, looking at this Dow to gold ratio going back to the beginning of freely traded gold. If you can see where my mouse is right here, this is 1971. So this is it as far as freely trading markets go. And what we can see here is since the 1980 peak in gold, when gold peaked at $850 and the Dow simultaneously was trading at 850 points, as crazy as that sounds. And then we look here at the 2000. This is the NASDAQ bubble area right here, up where the blue line starts. So you can see the convergence between this magenta color and the blue color. We look at some of the lows here from 2010, 2011. We look at some of the peaks here from 2016, 2017, the lows from the coronavirus here in 2020, some of the peaks here over the last 3 or 4 years. You can very well see this incredibly tight, concise, converging triangle. I mean, this has been going on for my entire life. This is 44 years in the making. We are here within 3 years of reaching the apex of this triangle. I have defined the levels here that would need to be broken to witness this ratio closing lower in favor of gold. It would be 14.5. And you can see that this level was just touched just a couple months ago. Actually, this is a quarterly bar chart that we're looking at. So just a few months ago, this level was touched. It bounced. We're right now up here closing at just below 17. So 16.92. So we're still in the middle, but clearly, here over the last 4 days since the Trump election, we're seeing this surge in the stock market and we're seeing a sell-off in the price of gold. 18.45 is the extremely clear. There is no other way to draw this trend line going back here from the peaks in the year 2000, this blue trend coming down, down, down right now at 18.45, with the ratio closing just below 17 as we were speaking, Tom, on Veterans Day, Monday, November 11th. So when I look at this chart and I say, okay, this thing has been consolidating for 44 years. We're here in the final 10% or so of the consolidation on this triangle. These charts never reach their apex points. These triangles never get to the apex point before they break. And this will break impulsively in one direction or the other. It's not going to be a little gentle break followed by a continuous sideways motion, for another decade or so. This is going to break either upward,
decisively.
Impulsive. It's going to be decisive. Yes, exactly. So, here we are just below 17 with the level that we would need to see broken if it's going to break in favor of the Dow at 18.45. Now, if I just take a history from my playbook, we talked about this before. What happened the last time that Trump was elected in 2016? What was the spread between the Dow Jones and the price of gold in the months following Trump's election? It was a 25% outperformance by the Dow versus gold. If we were to see that again, and so far over the last 4 days, I see nothing to suggest anything to the contrary. But if we were to see that again, it would be the initial break of this Dow to gold ratio upward in favor of the Dow, if that were to repeat again. Again, I see nothing to suggest that a different playbook is happening now. And in fact, when I look at what Trump is bringing together in this potential cabinet, this potential administration, it looks like this divergence that we've already seen for the last 4 days has the potential to be even more powerful than the last time it happened. And the reason for that is because you have the most economically successful innovator on the face of planet Earth, who this time has joined Trump and is at least going to be a close advisor. I'm talking about Elon Musk, at least going to be a close advisor, if not a cabinet member on Trump's team this time, whereas he was not. He voted Democrat back in 2016. So you think, well, if this Trump administration is going to bring the most productive human being on the face of planet Earth onto his team, how much more productive is industry going to get? How much more favorable are the laws and the tax climate here in the United States? How much more favorable is it going to get this time versus last time? I would argue it could be immensely more favorable for productivity, for innovation, for technology, for exploration, for all these things. And then I would say the other big piece of that, which is coming together, and here's why I think it could be so challenging for well-meaning precious metals investors, of which I am one. I still hold physical gold, in my vault back there. I still hold some positions in gold mining companies that I think have unique situations going on. I think even if gold is in a range trade for the next several years, which is my projection, I don't think gold is going to collapse. But I think even if it's in a range trade for the next couple of years, while technology and innovation are really growing, I still think there are special situations that are going to do extremely well. Companies that make new discoveries, companies that grow their deposits, companies that get bought out by larger companies, right? I mean, that is all still very much on the table. It's just that it has to be much more select, much more precise in choosing these companies versus just saying we're in a massive gold trade where throw money at anything with the word gold in it, as we were, let's say, from 2000 to 2011, or as we were for the last 9 years.
Mm-hmm. Is there any information we can glean from the gold to silver ratio chart that can be at all instructive in any of these areas as well?
Yeah, no, this is a complex looking chart here. We are looking at the gold to silver ratio over the course of the last 30 years, going back to 1994. And what I would like investors to do, I'm going to get rid of some of this is typically how I would annotate it on my own. I'm going to clean it up here so that we can focus on the most important trends. Of course, when we're looking at this, the higher that this ratio is going, the better that gold is doing compared to silver. And the lower that this ratio is going, the better that silver is doing relative to gold. And the more important point on that gold to silver ratio is that we want to see the ratio moving lower. We want to see the ratio trending downward with silver outperforming gold, because when that's the case, it tells us that silver, as the more speculative, smaller cousin of gold, it shows us that the speculative money, Tom, is coming into the sector in mass. Mm-hmm. And when we see the ratio trending in favor of gold, it tends to mean that the market is favoring the disaster hedge that gold provides, either in a war situation or, for example, like this major spike back up here up to 120, 126. That happened during the coronavirus panic, right? So we don't want to see this ratio trending higher. We want to see it trending lower. And if you focus on the behavior here that we've seen in the gold to silver ratio, for a moment, I know we still have a lot of lines on here, ladies and gentlemen, but again, this chart was for my internal use. I want to talk you through the major points that I'm seeing here. If you focus on these dark blue rising trends here, right? Notice these dark blue trends. For example, this one from 97 to 2003. And then notice how this trend was broken decisively lower here in late 2003, early 2004. That represented a strong wave higher for silver. That once silver broke the trend downward in favor of gold, it was a strong sign that the next wave of the bull market was starting that was going to favor silver. Similar to here in 2010, when we saw this notable breakdown in the ratio, see where my mouse is? This breakdown right here. That was a strong wave higher. That's when silver actually tripled in value in 8 months. Silver moved
That's
from
just
17,
just after, like in mid 2010 there.
Exactly right. It was August of 2010 specifically. And right here where my mouse is, we saw that breakdown. And then these are monthly candlesticks. We then saw 1, 2, 3, 4. There are 8 candlesticks to this peak here in early May of 2011. Silver tripled. It tripled in 8 months from $17 to $50 per ounce. The signal, the go-ahead signal for that was the break of this primary royal blue trend. Okay. So the breaks of these trends are very important. We can see that. We can see that here in 2016. We can see that here in 2020. Now, unfortunately, something different has happened when we look at the most recent cycle. I'm going to clean this up so we can really see it. When we look at the most recent cycle here, let's say from 2011, and we zoom this in, we can see the former trend breaks here, 2016 and 2020. But we're talking about this one. We're talking about from 2020 through the present. Notice that there's just been right here this false break. This is a false break. Notice the blue, the royal blue trend here. We already had a more aggressive trend break. We have a very clear 4-year royal blue trend, and we saw a false breakdown of this royal blue trend. When there's a false break, in fact, the point that I'm trying to make is at no other point in the last 30 years have we seen a false break the way that we just have here a few months ago on the gold to silver ratio. At no other point have we seen that on the charts. And what that tells me from a psychology standpoint, to get back to that, Tom, is that the cycle that we are living through right now, there is a problem with the thesis that silver is about to start catching up with gold. The people who say, hey, look, gold is at an all-time high, silver should already be at $50, silver should be above $50 based on the level of inflation. Let's say I can agree with you, again, to get back to that storm analogy, I can agree with you. Those fundamentals would seem to suggest that on the surface value. I agree with that. The problem here is that the chart is telling us the actual data, the actual real life data is telling us that there's something wrong with that thesis over the real world usable time frame. There's something wrong with it. I can't tell you what's wrong with it. In fact, it's not just one thing. I can guarantee you that. There are several things that are wrong with it. It could be that the mining of base metals is going to pick up so significantly here over the course of the next several years as technology and progress on innovation continue, that silver, being an 80% industrial metal, is going to see significant growth in production. It could be that. I'm not saying it's 100% that, but it also could be that the market is going to favor other asset classes. It could be that the speculative bid is not going to come into the precious metals favoring silver here for the next several years because, fill in the blank, because Bitcoin is now more popular, because the Dow to gold ratio has still not broken out in favor of gold. And so the speculative bid is not present in this market the way that it was in previous cycles. And we can see the evidence for that here. We've had a false breakdown right there where my mouse is. And then when you have a false breakdown, you go back to first principles. You say, okay, if there was a false breakdown, and so we're still in a rising trend in favor of silver, you simplify. You simplify the chart, you get rid of everything, you get rid of everything. You say we had a false break there, you get rid of everything, you get rid of everything. What is left? What is left? When the market becomes confusing and there's a storm on one horizon and another storm barreling down from the opposite direction, as Thoreau once said, simplify. So you simplify the chart. I'm sorry?
When in doubt, zoom out.
There you go. Zoom out and focus only on the most important trend, the most clear, the trend that there can be no arguing with. And so when we do that, we see, we've had a lot of back and forth here in the gold to silver ratio. Just to get back to the original question, I know it's been roundabout, but there are a lot of moving pieces to this. We come back to the most important visible point, which is the gold to silver ratio since 2011 has been in a long-term rising trend in favor of gold, in disfavor of silver and the speculative bid. And we see zero evidence for this changing at any point over the foreseeable future. Could it change? Absolutely. But I need to see this very clear magenta trend here, which right now would come in at about 75. The ratio is trading at 85. At the very least, I just need to see this ratio broken. I need to see this trend broken. That could happen. It could happen next week. It could happen 5 years from now. But show me that this ratio is no longer rising in favor of gold. Show that to me first, and then we can have the discussion about silver beginning to outperform. Until then, it's all stories and speculation.
Christopher, obviously the dollar is another big piece of this, and we've seen that strengthening come into the US dollar quite a bit since the election as well. Is that another part of this, this weight of evidence, or, another piece on the scale against, as a headwind, as it were, against gold and silver prices?
I mean, it appears to be right now. If we stick with the same screen, and I know we have a lot of charts coming up here at the same time. There's the Dow that we're looking at. Let's pull up the US dollar here. Let's do full screen. Let's zoom it way out. And again, we just want to focus on the most obvious, visible trends, the most obvious. And so I have a lot of different trends that I'm focusing on here for near-term support, near-term resistance, embedded trends, et cetera, et cetera. But if we just want to focus on the most obvious, right? What's the most obvious here? Is there any evidence, for example, that the US dollar is about to lose its status as the world reserve currency. Is there any evidence for that? If there was evidence for that, I would simply say that we would not be within the most clear 15-year rising channel for the US dollar versus other major world currencies. We would not be in a rising channel, which is valid until proven otherwise. And people can come out and say, well, the dollar is going to collapse eventually because of all this debt. So, Christopher, if you're just focusing on the chart, you're going to be on the wrong side of this trade when the dollar actually does collapse. And I would just say to you, where is your evidence that that's going to happen at any point in the next year, the next 5 years, the next 10 years, the next 30 years? How about we stick with what is true until it's no longer true?
Mm-hmm.
You know, what
or
is
until
true?
It's invalidated. Yeah.
Exactly right. Exactly right. So what is true until it's no longer true is that the dollar is gaining strength versus other fiat currencies. And if we look at just the period of time, go to a daily chart now, here's right here, this impulsive candlestick higher is the day after Trump's election. So we're just seeing evidence here that the dollar is, in fact, most likely beginning another leg higher versus other fiat currencies. If I could come back, though, to the discussion with you, Tom, because I favor charts, but I realize that not everyone does. I realize, and it's no fault of anyone out there. My father was not a chart person. And how I started this business was 15 years ago. I would sit in my living room with my father, who was a precious metals investor. In fact, he bought me my first silver eagle right here, which I still keep on my desk. This is from 1987. I keep this one out.
Mm-hmm.
My father got me into precious metals. And he was a precious metals investor as well. He just wasn't a chart guy. And so what I would do every once in a while is I would go over to my father's house and I would sit in his living room and I would connect my laptop to his big screen TV.
Mm-hmm.
And I would just have this type of conversation, just one-on-one with him. Mm-hmm. And he would be telling me about all the news that he heard from Zero Hedge and Alex Jones and GATA and all these well-meaning organizations. I think all these people are well-meaning. And I would say, yeah, Dad, I hear you on that. I hear you on what they're saying. However, are they actually showing you the chart of the dollar? Or is this just someone who wrote this article saying, I think the dollar is going to collapse? And he would say to me, wow, Chris, this was really enlightening for someone like me who's not a chart guy. Anyway, that was the origin of my entire business. It was simply to say there are a lot of extremely well-meaning, well-understanding investors out there who have gravitated toward these themes that are true. They're all true about the precious metals. The problem is it's not the only themes. There are other themes out there that may be equally or perhaps even more important than the debt and the interest and the inflation. That's what I'm saying.
Absolutely. So, Christopher, where do we end up looking if not in the gold sector? A big part of Trump's promises coming into the election was this idea of drill, baby, drill, the energy trade. Is that somewhere that you think is a possibility for investors to look as well? And let's say combining that on that side of the scale with the era of deregulation as well.
Absolutely, it is. Commodities, raw materials that are going to be needed to propel civilization forward, whether it's energy, whether it's industrial metals, whether it's energy metals, uranium, nuclear is going to have some role in this for sure. all of these things, if an investor is inclined to stick with the resource sector, I would say that all these things that are needed by growth and by industry are going to be deserving renewed focus over the course of, I mean, especially the next 4 years. But I think the next 4 years could set in motion. I mean, the way that this election has played out with basically a landslide in favor of Trump, not only winning the Electoral College, but winning the popular vote, winning the Senate, and it looks like on the verge of a few votes between winning the House, and then looking to basically stack the Supreme Court here within the next 4 years. That could be a conservative majority court, for the next 30 years, because those Supreme Court justices stay on for a lifetime. I would say that the trends that are being put into place right now are most likely going to be sort of acting as a springboard for the next half a generation to a generation, not just the next 2 to 4 years. So I think it's really important to think big picture, Tom. Absolutely, raw materials, energy. I think if I could interject one other theme that plays into all this that we talked about earlier, but I think it's really important to actually think about this. It's not just Trump and JD Vance who are coming in here, and then the Senate and the House, as we talked about. If you look at the individuals that Trump is surrounding him with, for the most part, and yes, there are going to be some neocons and some warmongers that sneak their way into this administration. There always are. And remember, guys, I participated in the war myself. I was in Afghanistan in 2006. I was in Iraq in 2008. I saw it with my own eyes. I saw the deception. I saw the lies. I saw the media and the government coming out and telling us that we were making progress, that this was a just war, that it was a righteous war in 2006 and 2009. And what I observed with my own two eyes was completely different from what all those people were telling me. And I just said, wow, if I could have been so blindsided and receiving one story, again, back to this theme of story versus reality, if I could be receiving, these stories from these individuals, and then what's actually happening on the ground is so different. This is what originally led me to the theme of investing in the precious metals. And so these are right themes, and these are righteous themes, absolutely. And let's add to that what's happening now with Trump's inner circle. Rewind, if you will, with me, Tom and the listeners, back to the election in 2008. Who was running on the Republican side and actually got through several rounds of the primaries? It was Ron Paul back in 2008. And if we have some younger investors here who don't remember what happened in 2008, I just want to share with you a little bit about Ron Paul. Ron Paul wrote a book with title End the Fed, End the Federal Reserve. Not mincing any words, not sugarcoating it at all. Mm-hmm. The thing that we need to do as a society is end the Fed. Because if we can end the Fed, and we've ended 2 central banks before in the history of the United States, if we can end the Fed, we can eliminate the source of the malinvestments. We can eliminate the source of the inflation. We can eliminate the source of the endless wars and the bailouts and the bail-ins and everything. We want to go for the source. And so Ron Paul was talking about this in 2008. Fast forward 16 years. Elon Musk, which some may argue has been the most instrumental in getting Trump back into the White House, and certainly is going to have a close advisory role, if not an official cabinet role. Elon Musk is right now going out and posting about Ron Paul, posting about bringing Ron Paul into the administration. And again, Ron Paul's most important issue back in 2008 was ending the central bank. I mean, this is huge. This is gargantuan. This is earth-shattering. We've had this central bank, this abomination of an institution, for 110 years in this country. And it looks like we have finally reached a critical mass of consciousness that people are waking up, and we're getting candidates and we're getting advisors in this administration who are saying, yes, this would be something that we want to do, ending. Okay, and so let's imagine here for a moment that Trump and Elon Musk and Ron Paul and whoever else they bring in, let's be realistic, okay? Let's say, yeah, they're probably not going to end the Federal Reserve within the next 2 to 4 years. Mm-hmm. It's probably not going to actually be abolished, even though I wish it would be. But even if they start taking steps in the direction of that, even if they start taking steps in the direction of curtailing the power of the Federal Reserve, or let's say altering the mandates of the Federal Reserve, altering the full employment mandate, and instead just saying, you know what, guys, focus on getting the damn inflation under control. Focus on preserving the value of the currency, even if it's still a fiat currency, even if these things are still called Federal Reserve notes and we don't revert back to them being called United States notes as they were before 1913, even if it's only a step in the right direction, saying, hey, all we're going to do is permit you to create 1% or 2% inflation per year. And after that, new mandate, you must stop. You must stop printing. Imagine if Trump and Elon Musk and Ron Paul even take a step in the direction that they're talking about. This is going to result, ironically, for those of us who understand the problems with fiat currency and why a gold-backed currency would be better. In the interim, because we're not going back to a gold-backed currency in the next year or 2 or 4, but in the interim, in curtailing the power of the existing Federal Reserve with the fiat notes, what that is actually going to do is to strengthen the value of the existing fiat notes, because the agency will not be printing as many of them as it would have otherwise if you had another administration in the White House saying, yes, just print as many as you want. And we even saw on Thursday at the Federal Reserve meeting, when there were a few reporters that actually asked Jerome Powell, will you step down if President Trump-elect asks you to step down? I don't know if anyone else saw it. That was an extremely awkward moment. He just stood there, really awkward, stone cold faced, and said, no. And then the reporter asked,
and then reiterated, looked down over his glasses and said, no, with no explanation, no extra words.
Nothing extra, no color commentary offered, just no.
Nothing that can be construed or interpreted differently.
Exactly right. And then about 3 minutes later, a separate reporter asked another question, which was, if you were asked to be stepped down, are you required to legally? And again, the same thing. No.
I did hear Danielle DiMartino Booth bring up the point that she reminded us that he is a lawyer. Powell is a lawyer, and he knows what the law is. So exactly to your point, it was extremely clear, and he knew exactly. He did not mince words, and he did not, kind of softball the answer, leaving room on one side or the other.
Exactly right. So if you think about what's setting up here over the next 4 years, I mean, you got a guy who admittedly Trump installed back in 2017, but Trump himself is sort of souring to the current administration of the Federal Reserve. And then you have this elected administration, which is coming in 2.5 months. You have the people that he's bringing on board, the Elon Musks, the Ron Pauls, the Tulsi Gabbards, the people who are against the excessive spending, the Robert F. Kennedy Jr.'s, the people who are against the wars, against the excess spending, against the inflation, right? I'm saying this is a good thing. It appears to me to be a really good thing, to be like the ideal backdrop for the potential. I'm not saying it's 100% going to go this way, because there can always be things that come from out in left field. And this is why we should always hold a core position in precious metals as an emergency savings account. It's the best form of savings. It's not a debate as to whether gold or fiat currency is the best form of savings. Long-term savings, you keep it in gold. Speculation a little bit more, you can keep it in silver. You want to make a few targeted investments in gold and silver miners that have unique situations or new discoveries going on? Absolutely. I think there's still space for that. But if we look at the potential for what this administration is bringing together, this could be the perfect backdrop for, you know, some sort of a golden age, some sort of a golden period for this country, for innovation, for technology, for exploration, nanotechnology, artificial intelligence, space exploration, medical advances. This could be, a window where the power of the Federal Reserve is, maybe if it's not entirely abolished, at least it's curtailed. And so with them sort of at a base level of printing money, you have a relatively more stable currency than you would have otherwise. And we could all start focusing on actually the things that I would argue, if you take a step back and ask yourself, who do we want to be as investors? Do we want to be sort of hunkered down in our bunkers, worrying about World War III, worrying about hyperinflation? There's sort of a romance to that kind of fantasy, but it's not really the world that we want to live in. I would argue that what seems to be setting up here over the next 4 years and potentially to last longer is more of an ideal backdrop to be an investor in global markets and to start thinking bigger and wider and taking that major step back and thinking, hey, what are we capable of here as a species if we actually have a backdrop that is not constantly trying to drag us down, but actually letting us grow and prosper.
Taking some of those tax burdens off, perhaps, right?
I mean, think about what Elon Musk did with Twitter or X. If you rewind 2 years ago when he bought Twitter for $44 billion, and he came in and he fired 80% of the workforce in the first week, 80% cut, slashed. What happened to the platform the next week? Did it disintegrate? Did it all go down? No, it worked just as well as it ever did. And I would argue in the last 2 years, it's become basically the most important source for news on planet Earth at this time. Mm-hmm. So, I mean, if he could do that with a major private company, one of the largest social media networks, okay, yes, he's not going to be able to cut 80% of the federal government, but he is single-handedly saying that he wants to form this, Department of Government Efficiency. And so even if he's only able to cut 20% of the bloat of the federal bureaucracy, and the agencies and the corruption, imagine if it's 20%, right? Or 30% or something more reasonable over the course of the next few years. I mean, imagine to the average person who's sort of just making ends meet, struggling with inflation. Maybe they have a few hundred extra dollars or $1,000 available at the end of every month to think about, what should I do? Should I put it into savings? Should I invest? I mean, what if you eliminated 1/3 of that person's tax burden? Because any government spending has to come either from direct taxes or the other form of taxes, which is inflation. It has to. There are no other sources for revenue. Direct taxes, inflation. What if we return 1/3 of that burden back to the average person over the course of the next few years from this new administration? And so the average person now, for the first time in their lives, can take that step back and say, oh, wow, I can actually think about not just, paying the electric bill and food, but I can think about, what do I actually want to do with my life? How do I want to do something bigger or try to contribute or maybe invest, right? Actually invest. And so you multiply that by a few hundred million people around the United States. What does that do? What does that lesser tax burden do? It's encouraging to think about. I like to think about that. I think if he's even a fraction as successful in reducing the size of the federal government as he was with Twitter, I think we see a massive boost to collective capacity.
Christopher, what is the tangible, let's say, timeline that these tax cuts and any new regulation can actually get implemented with it? It seems like there's going to be a lag time to all of this, or is it, in some ways, working with this expectation, just like the market is, seeing that expectation and just taking the bit and running with it?
Yeah, I mean, to be realistic, I think you see the first set of of tax reductions coming in the next fiscal year. Mm-hmm. I think starting from day one, Trump tries to start making some changes. It probably takes about a year to get the first wave of things coming through the tax system. I think within the first 2 years, you give Elon Musk 2 years to start poking around the federal government and looking at what could be reduced versus the inertia that exists for keeping the existing system in place, which is gargantuan. Mm-hmm. I was a part of it. I saw it. So you give Elon Musk, let's say, 2 years to start probing in there. And I think you see the beginning of the changes around the 2-year mark. And maybe you see some more moderately significant changes at the 3-year mark. And so to be realistic, probably the majority of the changes start coming in to play in the second half of this new administration, mm-hmm. admittedly. But then it's about, what can be eliminated from that point, and where is the country at that point? Do we let's talk about a couple of the themes that I believe are going to be significant over the next 4 to 8 to 12 years. Mm-hmm. Space exploration, I think, is going to be huge. And I know some people are going to listen to what I'm saying right now and think Chris is he's lost it. He's off the rocker. He must have been backstage smoking something before this. I assure you that I have not. I assure you that the analytical attempt that I am bringing to the table right now is the same analytical attempts that brought me to the table in August of 2015 when gold was trading at $1,100 per ounce and got me back into the precious metals sector and saying, when I take a look at the sum of everything that I see in the world, all my experiences from being an intelligence analyst with the military, all my experiences from being overseas in the war, juxtaposing that with what the stories that are coming to me from politicians and military leaders, when I take all of that together, that's what allowed me to make some of those calls in December of 2015 for the bottom that was pending in gold. I bring that same attempt. I'm not saying I'm going to get every twist and turn right here, but I bring that same attempt to what is happening across the markets with a focus on the data, a focus on the charts, always foremost. And I say to myself, probably the biggest theme that we are on the verge of here is the space exploration theme. There are other important themes that are coming here over the next few years. Some of them have started to trickle in. Artificial intelligence, robotics, nanotechnology, possibility of life extension from being able to rearrange molecules inside of our bodies by nanotechnology. Advances in medicine, free time that is going to be available to us, and it's the free time that then allows that part of the consciousness to say, hey, how can we grow? Because if we're only running on the hamster wheels, if we're like indentured servants to the system or to the slaves, as slaves, we don't have that opportunity to think freely, to think big, to start innovating. So I think all these things are big, but I think the single biggest one is going to be space exploration, and specifically the attempts that are coming here to get us to Mars within the coming years.
Mhm.
And I understand it seems far-fetched and it seems a little bit crazy, but if you look at where we are right now, where they are testing these super heavy boosters, these rockets that are going to be the rockets that get us to Mars, and they're testing them right now. And from this moment, it's 2 more years until Earth and Mars are aligned again for that window. There's a small window where we can actually send rockets to Mars. The planets have to be aligned. And so 2 years from now is when we send the rockets to Mars for the first time as a test. And then if you believe Elon Musk, it's 2 years after that we send the first humans to Mars. So okay, that's his projection. Maybe he's totally off. Maybe it's not 4 years from now. Maybe it's 12 years from now. Maybe it's 20 years from now, right? But we're moving in that direction as a civilization, as a species. The period of time that I liken this to, in the grand scope of history we're talking right now, is the late 1500s, early 1600s, when the British and the Europeans and the Dutch and the Spanish were preparing their ships. There were rumors, there were some initial, discoveries of islands by Christopher Columbus and some of the early explorers, but it was mostly rumors. It was mostly, is that ever a possibility? And what did the existing maps say at the time? Off the edge of the map, dragons lie there. That's what it said on the maps, because that's what they believed at the time. You go to the edge of the map, you're going to face dragons, you're going to fall off the map. I liken the period of time that we are living through here now, whether it's 2 years from now that we send the first rockets to Mars, or 20 years from now. We're in the couple decades before we literally begin to explore a new world. And the last time that we began to explore a quote unquote new world was the early 1600s. It was just a different continent at the time on the same planet. And so the opportunities that are ahead over the decades ahead are analogous to the opportunities that the first colonizers of the New World had. And that's not to say it all went smoothly. And in fact, 80% of the people that sailed on the Mayflower and sailed to Jamestown Beach within the first 10 years, 80% of those people died on those trips. So certainly progress and technology is not smooth. But as a net sum, if you were sitting in England, in 1620, before the Mayflower sailed to Plymouth Rock, Massachusetts, and you were saying that the most important thing to worry about is the Central Bank of England and how much money they're printing and the debasement of the currency, and you're ignoring the fact that these guys are about to get on a ship and discover a new continent with all these new trading possibilities, all these new natural resources, all these new discoveries to be made, land, resources, everything. You're telling me that the most important thing is to worry about the value of the currency when there's a new world about to be explored? I'm sorry, I'm not in that camp with you. I'm not in that camp. I was in that camp back in 2015. I stuck my neck out and said, I think the precious metals are bottoming in 2015. And we've had a good wave here. The price of gold has tripled over the last 9 years. But I am no longer in the camp where I believe that the value of the currency and the debt situation is the most important thing happening in the world. There are bigger things happening.
Mm-hmm. Well, Christopher, I think, being able to, as we said, zoom out and also thinking big are obviously very important themes and ways of thinking that are key to our progress. And as you and I have kind of analogized several times here, trying to figure out which side that scale balances to is the reason that I try to have so many of these conversations. So I really appreciate you adding to that.
Well, I appreciate that, Tom, and I appreciate coming on the show and speaking with you. And, we always have a little talk beforehand, and it's always a very open, non-judgmental, free flow type of conversation that we have. And I really think that's the most important thing for coming for this next generation that we're about to enter here. And I would just say that it's never a yes or no. It's not a binary all precious metals or no precious metals.
Mm-hmm.
It's never going to be that. But it's about taking that big step back, especially for those of us, myself included. I've been primarily a precious metals investor for the last 15 years. And I am right now myself in the process of looking at the charts and saying something else is happening here in the world. I can either ignore it, I can bury my head in the sand, and I'll be okay. If I was to do nothing but stack gold for the rest of my life, I'm going to be fine. Mm-hmm. But I'm certainly not going to participate in some of the incredible waves of progress that appear to be coming when I look at the data. Mm-hmm. So I'm saying it's not a yes or no. There's a place for gold, and there's a place for companies that are making good progress. We've got a project going on right now, Tom, just to show you that I'm not talking out of both sides of my mouth here. I'm involved with a company called Providence Gold, which is on the verge of a new discovery in Eastern Oregon. And they've got a historical resource there of 2.2 million ounces of gold in the ground. We just made a big investment into Providence Gold literally a month ago. Mm-hmm. As all this is happening here, and I'm saying, gold may have topped. We may be in the final part of this for gold. This is a company that's making a bona fide, incredible new discovery. They found visible gold below any of the previous known resource. You're going down to 200, 250 meters. They're pulling up visible gold intercepts out of that El Dorado project. So I'm not, I have not turned away from this sector. I still think there are opportunities. However, I think we have to be wider now. We have to be broader. We have to be saying, yeah, I'm willing to do that with a portion of my portfolio. What else is happening in this incredible period of time that we're living through?
Mm-hmm. Well, and as you're explaining that, I'm just thinking to myself, something that I have really strived to do as a host on the show is to keep an open mind, to entertain all of these possibilities, and to try to help anybody that listens to the show regular to challenge their beliefs and maybe challenge their echo chambers. And as uncomfortable as it might be, and I'm 100% with you, it isn't always easy to challenge these ideas or these narratives that even you're running, that you and I are running. But that is the reality of the situation. And we need to be able to step back and trade and or invest in the markets that are, rather than the markets that we want, as Tom Luongo always likes to say.
Absolutely right. And it's exciting. Like, this is really exciting. Mm-hmm. being alive. I'm so glad that I'm alive to see what's happening today, mm-hmm. and what could be happening, God willing, over the course of the next 40 years. This is super exciting. Mm-hmm. I think the world that we're living in today it's not perfect. There's a lot of corruption and there's a lot of problems still. But I think it has the potential to be one of the most exciting periods in history, arguably the most exciting period. Mm-hmm. So that's the feeling that I'm trying to cultivate, and then apply that to the markets and apply that to select natural resources as well going forward. It's really exciting.
Absolutely. Excellent, Christopher. Well, I appreciate you stretching our echo bubble out and really bringing a different and extremely interesting and valuable opinion to what's going on here. And that perspective, as I said, I think is extremely necessary. Let us know where we can find more of what you're thinking about and what you're keeping an eye on.
Yeah, the Website is the letter I and then goldadvisor.com. Been focused on precious metals, as you know, for the better part of the last 15 years. I will be in the process of expanding that over the course of the coming year to 18 months as the world itself expands here. So that's the website. And then if they want to follow my free work on Twitter or X, the handle is at the letter I and then global gold at iGlobal Gold. I post some things for free there, some thoughts, some charts, some data. So I would love to hear from anyone and interact with anyone who has found some value in the discussion.
Perfect. Christopher, really appreciate the conversation today.
Thank you, Tom.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.